Hello everybody, welcome to yet another MicroStrategy video. But this asset has been outperforming so many of my other stocks, so I have to keep talking about it. I love it so much. MicroStrategy is refining volatility, so I'm going to talk a little bit today about the refinery. But first, before I do that, before I talk about the vol refinery, I want to talk about the buy signal. Of course, typically on Sundays, I would argue 9 to 10 Sundays out of 12, he's flashing the card, right? And of course, right before the earnings, he doesn't tend to do it. But most week, he flashes that card saying that he bought Bitcoin on Sunday night to let us know. And he did that about 2 hours ago now. No tariff on orange dots. I want to talk about Bitcoin this weekend. Of course, Bitcoin went up. It's back above 84 now. That's because of the tariff news getting better and better by the day. And now we have so much of tech not impacted by tariffs coming from China. This is also good for Bitcoin because that means Bitcoin miners are not going to be impacted either. People waiting for their shipments, miners waiting for their shipments of Bitcoin mining equipment to the US, they're not going to be impacted. Summies are not impacted. And so, of course, the President of the United States walking back the tariffs. I mean, it seems like there's only a tiny portion of what was announced that's left. That's really bullish for Bitcoin, and that's really bullish for stocks. But Bitcoin is the only thing you can buy on a weekend, and that's why Bitcoin is going up. If stocks were open, I am sure the stocks would have been on fire yesterday. But we live in the 18th century as far as stocks go. They're closed on weekends. Crypto and Bitcoin will fix that at some point anyways. You notice the close of MicroStrategy, it's closed at 299 when Bitcoin was at 82.4. So if tomorrow Bitcoin is at 85 when MicroStrategy opens, we should have a pop in the price of MicroStrategy. At least that is what I'm thinking. The price to NAV is still high. It's healthy. This is a good one, right? We did not get back to the level of 1.45 that we had at some point in late January. The Bitcoin price to NAV has been recovering. It's been doing well. And so I assume, I don't know what he did, but I assume that he did less common offerings and probably the preferred, offerings on the preferred and not offerings on the common, which is why the price to NAV is, in my view, healthy, 1.8. I'm happy about that. If it stays at 1.8 for the long run, I'll be happy about that. Let's talk about the main way MicroStrategy, the main way people get exposure to MicroStrategy. MicroStrategy for most people, still to this day, is going to be the common shares, the stock, the MSTR stock. You buy the MSTR stock. In fact, most NASDAQ investor, like if you own the NASDAQ, your exposure to MicroStrategy is via the MSTR shares, right, which are included in the NASDAQ. I believe the rank is something like the rank number 17, the NASDAQ or something. So you get that exposure to simple MicroStrategy, which is Bitcoin on steroid. So briefly, as a reminder of a cheap strategy, because I'm going to talk about volatility refining and using MicroStrategy as a fuel for your volatility engine, for your options engine. That's option number 2. That's what a lot of people drawn to MicroStrategy do, but that's not really related to Bitcoin. That's more related to the volatility and monetizing that volatility. The reason number 1 why people buy MicroStrategy and the shares, they buy the common, and they want to hold them for the long run, it's the Bitcoin yield. It's because Saylor, by being a purveyor of volatility in all sorts of instruments, he's able to generate a yield because people pay up a premium to get access to that volatility, and that volatility allows people, of course, to play options games, to sell options, etc. So the Bitcoin yield is generated because of the premium that MicroStrategy benefits from for being a highly volatile asset. And so a price of 180, a price to NAV of on 180, really simply on the common, what does that mean? That means that he sells a dollar bill for $1.80. And you collect 80 cents. And why does he sell a dollar bill for $1.80? Because he sells the stock at $1.80, 1.8x Bitcoin, right? And what that means is that he's gonna take that 1.8x and turn it entirely into Bitcoin. The whole thing is going to be entirely turned into Bitcoin. So the delta between the premium, the 1.8 and the 1, that difference, that 80 cents difference is collected and put into Bitcoin. Feel free to look at my prior videos where I actually go in depth into the calculation and show you in depth the calculation as to how it works simply for the common stock. So when he dilutes, he accretes. He dilutes to accrete. He's not investing in a risky business endeavor. He's investing in Bitcoin. So the whole thing goes straight to Bitcoin, and the premium goes to Bitcoin. Of course, the ATMs on Strike and on Strife, the new preferred, they work a little differently, but doing ATMs on Strike and on Strife really helps the common take a rest, right? It helps the common keep that healthy price to NAV, that 1.8 price to NAV. Anyways, this is how yield is generated. Yield is generated by selling all of these instruments at a premium. This is how MicroStrategy generates the yield. And what does that mean? Like, why do we care about this yield? Well, the goal of MicroStrategy is to acquire more Bitcoin for us, the MicroStrategy common shareholders. That's the goal, acquire more Bitcoin. And so the simple way to understand this is, if you buy a Bitcoin, let's say you go on Coinbase and you buy a Bitcoin, and in year 0, you have 1 Bitcoin, and you just leave your Bitcoin on Coinbase. At the end of year 10, you'll only have 1 Bitcoin, right? Bitcoin doesn't increase on its own in Bitcoin terms. But when you buy Bitcoin via an enterprise like MicroStrategy, you're going to be paying up that premium to buy the stock, right? You're paying $1.80 for $1 worth of Bitcoin is what you're paying, right? So what happens if you take that 84,000 and you put it into Bitcoin right now? Well, you only get 55% worth of Bitcoin, right? Because of the price to NAV. Bitcoin as a percentage of market cap is only 55%. So if you take $84,000 and you put it into MSTR stock, only 55% is in the form of Bitcoin. So you're only getting 0.55 Bitcoin for 84,000. And so if you're a short-term thinker, that's really bad, right? That's awful. If you're thinking short-term, if you want to hold it for a week, you probably shouldn't touch the stock, right? No financial advice ever on this channel. But if you're a long-term thinker, if for you this is a long-term hold, you realize that yield is going to accrete. The dilution to generate yield is going to accrete to your shares. And assuming, this is my video, 14 days ago I made this video where I called Saylor a sandbag king, because with this buy today, he may already be at 15%. He had guided 15% for a full year. That video was 2 weeks ago. He was at 11% 2 weeks ago. So he guided on February 5. He guided 15% a full year, and 2 weeks ago, so like a month and a half later, he's already achieved 11%. What I'm trying to say is that if the buy tomorrow is a big buy, he may already be at 15% yield. And so in my model, right, and that yield accretes to the shareholder, I have to be like, okay, what's going to be the yield for the next 12 months? Like year 1, what's going to be your yield the next 12 months? And so in this video, I was saying, I think he's going to do like between 30, I said 37%, right? Just extrapolating. So let's assume he does 37% yield the next 12 months, right? So if over the next 12 months he does 37%, your 0.55 Bitcoin turn into 0.76. And then, of course, the law of large number kicks in. More and more people compete with him to buy Bitcoin. And so let's say in year 2, so 12 months after the first 12 months, right? Let's say he only does 25%, right? That's 0.95. In a matter of 24 months, let's call it 26 months to be exact, in about 26 months roughly, or 25 months, you would have turned 0.55 Bitcoin into 1 Bitcoin. You're now breaking even, right? So the breaking even, depending on the season, is anywhere between year 2 and year 4, if you really want to be pessimistic, right? And that's because he's able to accrete. That's because he's able to generate that Bitcoin yield. But he who owns MicroStrategy for just a week is really not gonna get a lot of yield, right? He's not going to accrete a lot. It's all about time, right? That's going to take years for the Bitcoin to double, right? And at some point there will be the law of large numbers, which in my view is probably beyond 2030 is when the law of large numbers kick in, and when it's going to be very, very hard for Saylor to acquire Bitcoin, because of course Bitcoin is a capped resource, and the more he acquires Bitcoin, the harder it is to get. So that's the chief reason, that's the main reason why people own MSTR share in the first place. And then you have the trader, and then you have the hedge funds, and then you have the Wall Street guys, and those people, they own MicroStrategy not necessarily because they believe in Bitcoin, although some people most likely do believe in Bitcoin, and I'm sure you can be both hedge fund and Bitcoin believer. But I think a lot of people are attracted, I don't think, I know, a lot of people are attracted to MicroStrategy because of the volatility. It's all about the volatility. And so MicroStrategy, this is from their presentation a few months back, MicroStrategy sees itself as a purveyor of financial instruments that are more or less volatile. And he's part of an ecosystem. So of course Saylor doesn't purvey of Bitcoin ETF, but the Bitcoin ETF is part of the system, and in TradFi that would be a Bitcoin ETF. On the digital side of that would simply be Bitcoin itself, right? And so the volatility of Bitcoin you can achieve that with a Bitcoin ETF. Saylor doesn't own that, right? But if you own something that's going to have a little bit of Bitcoin upside, but not as volatile, then you can buy the convertible, right? The convertible, it's a hybrid between a debt and there's a call option embedded in it, and you can buy that, and so you're going to have some Bitcoin upside, but really not much. If you want even less Bitcoin upside, right, you can buy Strike. And if you want, and Strike has a 10% embedded upside to Bitcoin, and frankly, Strife, I shouldn't put it in. Strife is even different. Strife is you're getting exposure to Bitcoin in the sense that in Strife, the preferred is backed by Bitcoin, but you're not getting any upside from Bitcoin. So Strife would even be even lower there in that type of security. But Strife is another option where you just get a dividend and you're not going to get anything Bitcoin. So it's even less volatile, but you still get some backing from Bitcoin. So you have Strife and Strike, so it's even less volatility, right? And MSTR equity is the most volatile thing that Saylor issues, right? MSTR equity is the most volatile thing that Saylor issues. But then, of course, on top of that, in the financial system, you have MSTX and MSTUs, which are instruments that have been built on top of MSTR, not issued by MSTR. It'd be very interesting to see if MSTR could issue some form of equity at some point that is on steroids, right? That is even more volatile, but even more high octane Bitcoin, but high octane volatility, a more shaky asset that like moves really fast, right? But also can really wipe you out, especially if you take a leverage position. So I'm not sure. Saylor has never said he would issue that, but a lot of companies have had no issues issuing that on top of Saylor's company. So MSTX and MSTU, that's an example of that. And of course, Saylor mentioned it. And if you want to do it yourself, if you want to reproduce MSTX, MSTU yourself, you can just play with options yourself. And that means you gotta own MSTR as the underlying, or cash if you do like a cash secure put or something like that, and you can just collect premiums on your own, right, without MSTR involved. And that's the MSTR options, and you can pretty much define your risk as you want, and you can go crazy with the options because it's all about the premiums, right? And MSTR as one of the best premiums out there. And so that's why Saylor defines themselves as a volatility refinery. It's a volatility refinery. There's many analogies you can use, and Saylor has used different analogies. He used the flywheel analogy before. My favorite analogy in this space, which I've seen Saylor used a few times, is the octane content of fuel. The octane content of fuel. Fuel that has high octane is going to trade at a premium. Sunoco, for example, they're known for selling racing fuel, right? That you can only put it in special cars that can handle that highly explosive fuel. But you can see racing fuel is very expensive. So in my little example here, this must be somewhere in California or something. But if you want to have 100 octane, you see the price of 100 octane fuel that only racing cars kind of use is going to be $8 a gallon, right? So slightly cheaper than Europe, but still. But in the US, it's $4.60. That's your regular car. But what happens if you put the 100 octane in regular car? Well, maybe it's not going to go too well. Maybe you should use the right fuel for your right engine. But that's the idea of volatility, right? The more octane the fuel is, the higher your options engine is going to go. And your options engine is how you make money based on options premium. It's a different way to play the market, right? It's all about the options market. And so, of course, the Bitcoin treasury company or the common, when you sell the common, because of that volatility, the asset becomes more expensive because you are more appealing to options sellers and options buyers. Because options buyer, think about the stock market. The stock market is a pump, right? And in the pump, in the stock market, you see this is MSTR, right? MSTR is 100 octane, and this is, I mean, these days it's tough to find a stock that's not very volatile, but let's just say this is like Procter & Gamble. Like Procter & Gamble is less appealing to an options trader than MicroStrategy, and so people are willing to pay up for MicroStrategy. Hence, that price to NAV being 1.8. So we have to pay up 2. Even if we don't do options, we still have to pay up 2 for it because it's appealing to a lot of hedge funds. So the price to NAV is going to be higher because of the high octane of the stock. And Saylor is going to be able to generate a bigger yield because when you sell a convertible bond, you also sell a long-dated option with the bond. And who collects that premium? That's Saylor. Saylor collects the premium on the convertible bond. He collects the premium, for example, in the form of low interest rates, very, very low interest rate, or in the form of a higher strike price. That's how you collect the premium on the convertible debt. He collects it for himself, or he collects it whenever he issues new stock, right? And so that's the same thing. And so for this to work, the stock price of MicroStrategy needs to look something like this. Up, down, up, down, up, down. And this is roughly Procter & Gamble. Procter & Gamble is boring. It's old. It barely moves, right? You're not going to sell a lot of premium, right? You're going to be regular gas at the gas station. But if you look like that, you're going to be racing fuel for the hedge fund. And the hedge fund's going to pay a premium to have that stock that is moving a lot. Remember, last Thursday, MicroStrategy was up 25% in a single day. That's amazing. That's that premium. And so on top of MicroStrategy, of course, a lot of people have figured out that it's good for income. And you can create a lot of income without having really an interest in Bitcoin, without caring about Bitcoin, without having a directional opinion on where Bitcoin is headed. You can still make income. And so I would argue a good 30% of the people interested in MSTR could not care less about Bitcoin, but they care about the vol. And so what does one do? How does one generate income on the volatility? Well, the option number one, and there's many different options. This is just what I'm selecting for this channel, right? But one of the options, of course, is to sell covered calls on MSTR. If you dare. If someone's there, remember, this is an asset that can go up 25% in a single day. What happened if you say, "Oh, I'm going to be super safe and I'm going to sell calls," and it's Thursday, or was it Wednesday or Thursday? When the stock was up 25%, it's Thursday, and in the morning you're like, "Well, yeah, I'm gonna sell some calls," I mean, if you sell it like 25% out, you're not going to make much money for a stock that can go there. So that's what that can break that strike. So that's why I say, if you dare. Keep in mind that the Greeks, they were never handled. They never dealt with such a volatile animal. Like, I think we need to rethink a lot of options trading because of the volatility of MicroStrategy. I would be so careful selling options on MSTR, especially if you losing your shares means you're gonna have an insane tax bill. Like many of us on this channel, when we bought it in the $20 a share for MicroStrategy, like to me, this is way too risky because it's not about losing the shares, it's about the tax bill. If they were to be lost, right? The tax bill would be absolutely insane. So I would be so careful about doing that. Like maybe I would do it maybe on a Friday afternoon, 2 hours, forget about that. Like an hour before the close on a Friday afternoon. Maybe. And you sell 0 day to expiration options. Maybe. That's how risky that is. No way in the world I would have covered calls on MSTR overnight. There's no way in the world, especially when, this thing can pop so much, right? Bitcoin continues trading on the weekends, right? And then on Monday, you have a very, very violent open. And that open of MSTR stock on Monday is very violent. Why? Because, one world, TradFi, is stuck in the 1800s. Another world, digital fi, is modern and is 24/7. And that's why you get all of these overnight swings all the time with this stock. Anyways, so careful with that. Options on a volatile stock like that, you want to be careful. It's really high octane. If you're playing with options in STR, it's just like you're playing with racing fuel on the barbecue. And so racing fuel on the barbecue, it can be fun, but you can also end up in the emergency room because you threw some racing fuel on your barbecue and it blew up, right? So, anyways, I think the analogy is understood, right? So, anyways, that's option number one. Option number two, of course, and I know I know that. Do I have it here? Wait just a sec. Option number two is forget about MSTR, forget about Bitcoin. Okay, I don't have Misty here. I wanted to talk about MSTY. Okay, next video I'll tell you about MSTI. Oh, I have it right here. MSTY. Anyways, next video I'll talk more about MSTY. Option number two is forget about MSTR. Forget about BTC. You just want to own it for the premiums, and so you just want to deal with the premiums, and so you will MSTR. That's your option number two. So. Theoretically, if you will MSTR, so what is willing, right? You're going to write a cash secured put at the money or near the money. You're hoping to get assigned, and then you get assigned. And once you're assigned, you write a call, right? And you write a call, very, very short dated to the next week, and you hope your shares to be called, and then you get your cash back, and then you write again a cash secured put, and that's the wheel, right? That's the whole idea of the wheel. And so theoretically, it's a way for you to collect the maximum premium. You collect the maximum premium each week, and those premium added up over 52 weeks, they should exceed the big loss weeks that you're inevitably gonna have. And that's the theory. The big question is how many weeks of loss are you possibly going to have? And that week of loss could be, for example, you wrote a call, right? You sold a call, and MicroStrategy is up 25%. And then boom, you sold your call 25% lower. Well, that week where that happens, that's a 25% loss. So you may have collected, 10%. You may have collected 10% equivalent in a week on your premiums, but you've lost 25% on that week. So 10 minus 25, that's going to take you, a week and a half to 2 weeks for you to get back that loss. And so of course, the volatility amount, right? We'll say, let's assume you make 10% a week. Maybe that's a little optimistic. Maybe it's more like 8. But for the sake of simplicity, let's assume you make 10% a week selling at the money, selling the riskiest options you can take on MSTR. So that's 500% a year. Then you gotta subscribe the loss. And the question is, how many weeks are you gonna be losing 25%? How many weeks are gonna be those 25% losses? And theoretically, I agree that especially in a chop side market, in a market where Bitcoin is boring, this theoretically could be outperforming, but I can't use the word theoretically enough. Like, we are in uncharted territory, right? This is all theory here. We are in uncharted territory. We don't really know. We don't really know how high could Bitcoin go. And, that's what a lot of people say in Bitcoin, right? All your models are broken. What if Bitcoin is at 250,000 at the end of the year? Well, in that case, I don't think the options strategy is going to go nearly as well as just owning MSTR and going about your day, going to the park, forgetting about everything and just owning it, right? If Bitcoin pops, if we have these God candles as they're called, and if we have them regularly, I would be very careful with that. But yeah, if it's sideways, theoretically, strategies like MSTR, like wheeling MSTR, these theories should work if it's going sideways. And about MSTY, so many of you have asked me about MSTY, is probably fine. Like theoretically, MSTY sounds fine. I would just rather do the options myself. And to me, why would I rather do it myself? Because of course MSTY has high fees, but also you have more control. Namely, how do you adjust for a week on which you have high conviction? You know, let's say the Bitcoin reserve is coming, and you know it's coming, and everybody's talking about it coming. Maybe the week where President of the United States says, big announcement coming from Fort Knox, or whatever like that. Maybe that week you don't want to be in options. Maybe you want to be out of options on very, very important weeks, right? You have that option to do that. You have that option to do that if you will it yourself. You don't really have that option to do that if you do MSTY. And I will conclude this video, and I'm sure many of my viewers on my channel have figured this out. There's an even crazier idea than MSTY. MSTR, it's to simply do the wheel on MSTX/MSTU. Do the wheel on MSTX/MSTU. And of course, we're not going to talk too much about that because we don't want to turn this channel into Wall Street bets. But that's even more on steroids. And I know some people also do the wheel on MSTY, and that's another thing you can do. Anyways, that's even more options on steroids. We are just beginning to figure out all the things that can be built on top of MSTR, and it's just beyond exciting to me. But of course, my exposure is just plain old common. And, you know, maybe one of these days I'll do a covered call on a Friday afternoon late, just for the fun of it. But you know, it's the options game is a totally different game, and there's two crowds that are attracted to MSTR, right? And for this channel, as far as we're concerned, we spend way more time discussing simply the Bitcoin accumulating game, the Bitcoin yield game. But you know, volatility is vitality, and that statement has never been truer, especially when you consider that the stock was up 25%. 3 days ago in a single day. Anyways, this was not financial advice, not investment advice, no advice, just entertainment. I hope you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.